What is an ISA? So an ISA or ISA stands for Individual Savings Account. So in the UK, you're allowed to put a certain amount of money into an ISA, and what that does is allows you to potentially gain some returns on it. So whether it's through interest or dividends, you get a certain amount of return in exchange for putting your money into such a thing. Although these returns are not guaranteed, an ISA is different because it protects you from any tax. So any returns made on your money that is put into an ISA is not subject to tax. So there are four main types of ISAs in the UK. The first is Innovative Finance ISAs. Now this is a new type of ISA, and it basically involves peer-to-peer lending of money. So if a company needs a certain amount of investment, instead of going to the bank where they may be rejected, they can be part of this scheme where basically you're lending your money to one of these people, and in exchange you expect a certain amount of return. This is agreed beforehand. Now I definitely would not recommend this type of ISA because it is not protected by the FSCS, the Financial Services Compensation Scheme. So the FSCS is basically a scheme run by the government which ensures up to £85,000 from each account, not just each bank account, is protected if the company responsible for dealing with the money goes bankrupt. So without the FSCS, your money is liable to huge amounts of risks, and there have been cases recently where whole institutions of this type of ISA have gone down, so definitely would not recommend. The second type of ISA is a lifetime ISA, and you can open this between the ages of 18 to 40. So what this ISA basically is a long-term investment or saving strategy where you can put in up to £4,000 per year, and the government gives you a 25% bonus each year, so up to £1,000, and this is mostly used for purchasing properties. So you can only pull out your money without having to pay fees if you're over the age of 60, or if you're buying your first house to a certain amount, or if you're buying a house with a mortgage. So the downfall of this kind of ISA is the fact that there are many conditions, and also you can't take out your money until you're 60, or if you're buying a house, and also you can only put in £4,000. So the next two type of ISAs I would say are the main ones that you should focus on to. So the third type of ISA is a cash ISA. So a cash ISA can be opened up in the UK to anyone over the age of 16. And what this allows you to do is put money into a savings account that is going to generate some sort of interest. So all this interest is actually tax-free. It's a very simple concept. You put your money in it, it gains interest, and you have to pay no tax on it. So however, cash ISAs don't usually return a lot, typically like 2 to 3%. So it's very small money. Even if you leave it for a long amount of time, you're not looking at too much of a return. So the final type of ISA I want to talk about is stocks and shares ISA. So this is where you put your money into stocks and shares. So basically into companies that you think are going to grow more, and you're putting your money and trust into that, and the returns that you will gain are also tax-free. So you can have a managed stocks and share ISA where a company like, for example, Vanguard, you can put into an ETF and they will manage your stocks and shares ISA. This is very simple and probably the best way to start investing, because these managed accounts are usually managed by experts, and index funds are tracked by experts, and you can almost never beat these funds. However, you can dabble in individual shares with apps such as Freetrade, which allows you to buy shares into companies that you have a hunch is going to go up, and all the returns that you get on there in your ISA is tax-free. So how much money can you actually put into an ISA? The government gives £20,000 that you can put between your ISAs. So with a lifetime ISA you can only put £4,000 in. However, with a stocks and shares ISA and a cash ISA, you can put in up to £20,000. So you can max out your stocks and shares ISA with £20,000 like I did, or you can max out your cash ISA with £20,000. You can also put £10,000 in each, so it's a bit of a mix and match, but you can only put a maximum of £20,000 per financial year, which runs from April to April. So if you've maxed out one of your ISAs and you tried withdrawing money, you cannot put any more in for that financial year. And of course, the more you leave in your ISA, the more returns you're going to get, and the more you leverage not having to pay so much tax. So with April coming up very soon enough, you'll be reminded by many banks and other financial institutions that your deadline for tax ISAs is running out, which basically means that if you haven't already put £20,000 between your ISAs, especially the cash ISA and the stocks and shares ISA, that you should do that, because after April it will reset and it will allow you to add another £20,000. So basically, if you're putting in £20,000 every single year into your stocks and shares ISA or your cash ISA, you're maximizing your chance of getting returns that are not taxable. So what is the right ISA for you? I would highly recommend looking into a cash ISA for easy investing, or a stocks and share ISA. So So I would definitely recommend opening a Vanguard account and buying the S&P 500 as much as you can onto a stocks and shares ISA. If you're new to ISAs and you don't have any ISAs and you haven't touched any of your £20,000 limit, I would definitely just buy S&P 500 stocks. Historically, this fund has done amazing and it will probably continue to do so. You can never really time the market, so there's no point of you waiting for the share value to go down. So why not open a Vanguard account where they actually manage everything? They'll manage all the dividends and everything, so you really don't have to think about it much. I hope this video has been useful to you. I hope you know a bit more about what an ISA is and how you can maximize your earning potential without having to pay tax. If you like this sort of video, please let me know if you want to see more, and leave a comment down below to ask me anything and I'll try my best to research and give you the correct answer. And as always, thank you for watching.